which is where TCS is the big story this morning, right? So on my 3 stocks to watch, I'm going to kick off with TCS, and this is interesting because it's a thumbs up. It's a thumbs up despite weak numbers because of the strong commentary. That has helped regain confidence. Strong deal wins have come in at $10.2 billion, up about 18.6% Q on Q, up 26% year on year. So that number is good. The company says they're seeing improvement in sentiment on discretionary spends. And as we knew, TCS is all going to be about the commentary. Now let's look at the core numbers. Revenue is down 0.4% quarter on quarter to 63,973 crores. Its EBIT, its earnings before interest and tax is up 9.3% to 16,900 crores. Margins are at 26.4% versus 24.1%. So not bad in that sense. That's also an uptick, and net profit is up 4%. So a little weak over there. Dividend has also been approved. But I want to come to what their outlook says, and this is something, what they say on demand and outlook, it becomes most important. So on demand, they say they're seeing early signs of revival in discretionary spending, though demand has not fully recovered. The demand environment is getting incrementally better, and they see improvement in decision-making cycle by clients. The outlook is what's key when you look at TCS. They expect calendar year 25 to be better than calendar year 24, though no double-digit growth. Margins are expected to improve in quarter 4 of FY25. The exit EBIT margins for the fourth quarter could be closer to 26%, and the aspiration is to stay between the 26 to 28% bucket. Just quickly on what brokerages are saying today, and that's what's important. I mean, you'll see the hold and the buy calls coming in on your screen, and most of them are quite positive. But I would pick up for you what Nuvama is also saying. Nuvama specifically, because they've maintained a buy with a target of 5,200 and upside of 28.5%. I think Nuvama is the most positive note of all. They're saying results tick all the boxes despite benign expectations. Deal wins were super strong, is a word that they've used, even without any mega deals. So deal wins were strong without any mega deals. That's important to remember. And commentary on early signs of revival in discretionary spends leads to a bright outlook. They view the strong deal wins and efforts to offset BSNL revenue impact as positive triggers. Remember, the BSNL party sort of ends now by FY27. So that's the view on TCS. It's an uptick today, maybe a thumbs up, and you will see maybe the rest of the pack also coming through. The next one is also a positive from my side, thumbs up on IRCTC. Macquarie has initiated coverage with an outperform rating and a target price of 900 rupees, implying a decent upside of 20%. They say that they have a monopolistic advantage, which frankly they always did. The direct market share of 80% in rail e-ticketing. They also earn an extra commission via 20% and indirect flows, because you can book IRCTC tickets on various platforms. The key growth levers are higher share of reserve train tickets and upgradation of the Indian train fleet, improving contribution from ad revenue as well. They're saying that they're going to be seeing the benefits of modernization. They earn a license and commission fee from catering services and will benefit from more restaurants and outlets, delivery apps, etc. So IRCTC is one that should be on your radar. Not so much for SRF and Navin Fluorine. So that's my third stock, and it's a thumbs down because look at the run up yesterday. If you see what's happened with an SRF and a Navin Fluorine, they ran up on the hope of US refrigerant price hikes, both of them between 9 and 13, 14% up. Now, a clarification came in on exchanges post-market hours saying that these prices are in the US market. Prices remain a function of demand and supply in relevant segments. No material impact for the company in the domestic market. So that was a statement by SRF. Same logic extends to Navin Fluorine. I would say you could expect a bit of a pullback today when reality hits that the base prices have to be increased much more to make an impact in the Indian context. So those are my top 3, Alex. 2 good ones and 1 thumbs down. Yeah, there are a couple of interesting ones on my list as well, Tamanna. I'll start with IREDA, which is a positive. It was down in trade yesterday, over 3% under pressure, and it is trading considerably below its all-time high.
But let's talk about the results, because that's what you should focus on at the start today. Very strong net profit growth, nearly 27%, the total income also growing by as much as 35.6%. And ultimately, this is a reflection of the kind of demand that you've seen for loans in that sector. Loan growth in the quarter gone by also pretty strong at 36%. So expect this stock to be something to watch today. Of course, if you look at the multiples, I'm talking about the valuation multiples, one can argue that it's still pretty elevated. But it has come off quite considerably from the all-time high, and so certainly something to watch as to whether or not it might see a pop in trade today. The second is a basket of stocks. IGL, I'm talking about Indraprastha Gas, reacted in trade yesterday to an update with regard to the APM, or Administered Price Mechanism gas allocation, which is set to go up for that company as of the 16th of January. It came through post-market hours that this is also going to be the case for Mahanagar Gas as well as Adani Total Gas. And yesterday in trade, of course, these two were under a tad bit of pressure. MGL, of course, gained a little bit, but Adani Total was down. Expect this to reverse to a certain extent, and there to be a positive trigger for these two in trade today, because there has been a change in the allocation for these two companies as well. That was what was announced in trade, or rather post-market hours yesterday. And what happens, and you need to understand the context here, because in the previous quarter, that is in the quarter ended December, you had a deallocation, and you have a fixed price for the Administered Price Mechanism gas in India. So if you have the cheaper price gas that is reducing as a share of the whole, then you have margins under pressure, because you have these gas companies that have to go out and increase prices. Now, when you have a higher allocation starting January 16th this year, then automatically a large part of that impact gets reversed, and that's exactly what the brokerages are also saying this morning. They're saying that the pressure to increase prices for these companies is not going to be very much, and they just need about 3 to 5 rupees or thereabouts per unit of a price hike to maintain that margin parity. Of course, don't forget that Q3 is going to be a little bit of a pain point for these companies, but Q4 will be significantly better, especially on the sequential basis. The last stock that I'd talk about, so by the way, that's a thumbs up. The last stock that I will talk about is Tata Elxsi, and this is a thumbs down, because the earnings picture is a little bit murky, it's a little muted. You have a revenue downtick of about 1.7%, coming at 939 crore rupees. The margin compression has taken place in the quarter gone by. It's come in at 23.5% compared with 25% in the comparable quarter, and we're looking at this sequentially. The net profit has come down lower as well, at 13% lower at 199 crore rupees. A few updates with regard to the businesses. Transportation, of course, has grown just about 0.5%, stayed flat sequentially. In constant currency terms, media and communications revenues also stayed more or less flat. Healthcare has seen just a marginal uptake of about 1.1% or thereabouts. And so expect the stock to see a little bit of pressure. Of course, in 2025 itself, the stock is down over 5%. So certainly it's something to watch. It's been under pressure over the last few trading sessions, Tamanna.
Yeah.